Tulsian joins in as promised. Ms. Tulsian, morning. Let's start with the textile stock, Garden Silk.
Mitali, Garden Silk again, very strong brand equity company, and they have strong presence with 300 retail outlets, of which 18 outlets are held by the company. Those are company owned. And if you see the performance in the current year, all the textile stocks have been performing very well, especially the companies, those who have a strong brand. And this company also is holding Garden Vareli. And if I go by the financial performance for first 9 months, they've already achieved the turnover what they had in the FY10 to the extent of about 2500 crore plus, and the EPS has been at about 15 rupees for 9 months, closer to about 50, PAT being at 55 crore and equity at 39 or maybe 40 crores. And if you see the depreciation burden, the company always has an equal, almost an equal depreciation what they have been reporting for depreciation. So cash EPS for 9 months has been at about 31 rupees while the EPS was at 15 rupees. So going by the same financial performance, the company should be able to post an EPS of close to about 22 rupees for FY11 with cash EPS of 44. With top line of 3600 crore plus. But if I go by the FY12 performance, the kind of earnings which we see with the synthetic textile makers, the man-made fiber makers, they have the advantage over the cotton textile makers. They should be able to post a top line of close to about 4400 crore. And I won't be surprised to see the EPS coming at about 27 to 28 rupees for FY12. So if you go by the same parameters, if you put a P multiple, it is available at a P multiple of close to 4 on the forward earning and maybe at a 4.5 to 5 times on the historic earnings, with cash EPS of close to with cash P multiple of less than 2 for FY12 and 2.5 for FY11. So I think the downside is very minimal, but if one can hold for the stock, one can hold this stock for say 6 to 8 months time, can see a price of 160, which is now ruling at around 108. Yeah.
Morning, Mr. Tulsian. Switching to pharmaceuticals, you like Indoco Remedies. Take us through what kind of price targets you would have there.
Again, Indoco Remedies, they are into the API and formulations, and they have 6 manufacturing plants. They have brand product portfolio of 135 products, of which 14 products are in top 3 brands category, and they have presence in 35 countries, of which many regulated markets are also included. And if you go again by the financial performance, for first 9 months, the company has posted an EPS of about 33 rupees on a top line of close to about 370 crore. And this performance was achieved by the company in whole of FY10. So already the company is on a path of showing a growth of about maybe 35 to 40% in FY11. They should be able to post an EPS of close to about 45 rupees per share for FY11, which could rise to about 52 to 54 for FY12. And the company has a very small debt of about 40-45 crore, which is largely used by the company for working capital. So if I take an analysis, it can be called as a debt-free company. Company is available at a P multiple of close to about 10 or 11 on the historic earning, and the kind of presence they have, they have presence in various, as I said, that 135 products. So, and that too in the regulated market. So I think amongst the mid-cap, or maybe amongst the mid-cap pharma, this looks quite an interesting stock, and I'm expecting a price of maybe about 600 rupees in next 8 to 10 months time.
What about Binani Industries, Mr. Tulsian?
Mitali, there is interesting, accumulation going on in this stock. Actually that was expected, that post delisting move of Binani Cement having successfully completed, Binani Industries is going to see I am referring here the Binani Industries, not the Binani Cement. So Binani Industries is bound to see this kind of movement, because they have been successfully acquired now 95% stake of Binani Cement, and Binani Cement is getting delisted. So if you see yesterday, the stock Binani Industries has moved by about 30 rupees. In fact, there has been strong accumulation going on. And if you see the rationale behind going for delisting of Binani Cement is to eventually give the control of, or hive off or sell the cement division to the ultimate buyer. And since this company has a present capacity of 9 million ton, which is going to get increased to about 15 million ton in next 12 months time, and they have presence in India, China, Mauritius, and if you see there is a lot lot of appetite for the larger cement players. Suppose if a company has a capacity of 10 million ton, in my view, and that too with the newly created capacity, all those companies can easily fetch a price of $160 per ton, and this company falls in that category. As I said that eventually they will be having 15 million ton. If I go by the present cement companies in India, there are only 3 companies, having a capacity of 10 million ton. That is Sri Cement, India Cement, and third one and fourth one is this Binani Industries. So I am taking a call that ultimately the promoters are going to sell this company. The cement division can fetch them at about 8 to 8,500 crore. If I go by the present market cap of the company, it is less than maybe about 650 crore. Even if I add the debt of about 24 to 2,500 crore in the books of the company, total debt is at about total EV of the company is at about 3,500 crore, 3,200 to 3,500 crore. So I am expecting a big corporate move, likely to happen in this company, which can take the share price to about 350. Because if you see the track record of the promoters, they have been very conservative, and if they have initiated a move, first off, delisting the Binani cement at a higher price, there is bound to be some game plan going on in the minds of the promoters. So I am quite optimistic purely on the expected sale of the cement division, and that can result share moving to about 350 maybe in next 8 to 10 months time.
Quick word on the fertilizer stocks, Mr. Tulsian, because they all jumped up 7-8% in the last 1 hour of trade. How have you been reading how things have been progressing on the reform front out there and the deregulation? Do you think it's about to come in?
Even honestly, as I said, I have been maintaining my view that I don't think that deregulation is possible for urea sectors. There are a lot of complications, involved in respect to the migration of the feedstocks, allocation of the full desired gas quantity to all the sectors, and the capital subsidy in case the migration happens. So I don't think, and apart from that, I don't think that decontrol is possible, and even the price hike is possible, because last year we have seen 10% price hike in urea. So I don't think that it is likely to get raised, maybe a 8 to 10% rise, which could make the prices of urea to go up by 50 paisa per kg, which is now getting sold at 5 rupees 50 paisa. So I don't think, but yes, there are all these issues pending. The committee of secretaries have forwarded their recommendations, and now it is likely to get deliberated. So sometimes you see this sporadic or maybe the renewed interest, but yes, one can say that there is a lot of potential for this sector to grow, and especially the companies, those who are presently having a gas as their feedstocks, in which Chambal and RCF both falls in that category. So I'm positive on the companies, or even maybe for that matter GNFC, because GNFC has already initiated the steps to migrate from naphtha to gas, and if you see the present profitability, fertilizer sector is not contributing anything to the GNFC. So all these things, those who are already operating with the gas-based fertilizer plants, or those who have initiated the steps for migration, I am positive on that. But one cannot really take a general call on the stocks like maybe Nagarjuna fertilizer or something like that, which have the problems of the debt, which have the problems of working, or for that matter maybe the Madras fertilizer. So yes, there are positive view on the urea maker, but honestly I don't know the reason for all those stocks having moved in last 1 hour yesterday.